Ever wondered how Netflix is doing financially? Well, there's been a notable increase in their anticipated earnings per share, a hefty 14.5% year-over-year to be exact, surging from 2.89 per share to 3.48. Although the projected revenue shows a decrease of 1.2% from the previous $8.645 billion to $8.541 billion. The challenges faced hint at a complex future in terms of labor relations. Now, let's delve into Netflix's performance data. In the last quarter, Netflix surpassed the estimated earnings per share, but the revenue fell a bit short of expectations. Looking ahead to this quarter, Netflix is anticipating higher earnings per share and an increase in revenue growth. However, there are challenges on the horizon. From strikes to ongoing negotiations with industry professionals, these factors hint at a potentially complex future for Netflix in terms of labor relations. The projections for this quarter reflect a higher EPS and revenue growth. Moving on, let's talk about the enhancements made to the product experience. Netflix has taken strides to tackle password sharing, introducing features to help users better manage their accounts. The impact of these changes on revenue is expected to unfold gradually over the coming quarters. But Netflix isn't just stopping there. The company is also eyeing growth in key areas such as pricing, volume, and particularly advertising. This new tier of revenue holds a lot of promise for the streaming giant. The focus remains on revenue growth factors like pricing, volume, and advertising. What about Netflix's strategic goals? Well, Netflix is keen on ensuring both accessibility and affordability for its users. They've been launching new features, keeping a close watch on how these influence user behavior, particularly in terms of their plan choices. These efforts are not just for show, they're part of a calculated strategy to make the platform more user-friendly and value-driven. And it seems to be working. New subscriber data is optimistic, showing that they are well qualified with better retention. Let's take a look at Netflix's advertising aspects. Greg Peters, the co-CEO, acknowledges that the current advertising market is a bit soft. However, Netflix isn't just any player in this field. Its unique position allows it to offer something different. Peters emphasizes that the key lies in enhancing advertiser features to make them more enticing. He believes that these improvements will be a game changer. Netflix is in the early stages of its advertising journey, with a dedicated engineering team continuously iterating based on advertiser needs. Now on to some financial insights from Netflix's CFO. Spence Neumann paints a picture of the future, indicating that the 10% goal remains a distant target. He highlights the focus on linear and digital ad revenues. Neumann also talks about the factors affecting free cash flow, acknowledging some unevenness due to strikes. Despite this, he confidently projects a positive free cash flow in the coming years. Spencer Wang expects a growth in revenue and profits, projecting a content spend-to-content amortization ratio of around 1.1x in 2024. Finally, let's look at Netflix's content strategy. Co-CEO Ted Sarandos is steering the company towards acquiring intellectual property, or IP, over mere assets. The goal? To provide valuable and unique content to its members. As for live sports, Netflix isn't changing its game plan. They're still not venturing into airing live sports events, but they're excited about sports-related programming and storytelling. This opens up the possibility for future live events like golf matches to be featured in a new format. Netflix's stance on live sports remains unchanged. They're keen on sports-related programming and storytelling, hinting at potential live events like golf matches in the future. In conclusion, Netflix's financial health showcases a promising future with strategic growth plans, and it's also worth noting the risks involved in market fluctuations and industry challenges. While the stock has shown promise, it comes with its risks. As always, exercise caution. Buyer beware. For more information, the description is below to join a community of like-minded traders.
Arieous Invest. Trading reimagined.